You probably heard the news. Tariffs between Canada and the US are making headlines again. But is it really as bad as it seems? Today we are breaking down what's happening, how these tariffs impact real estate on both sides of the border, and what Canada can do to become less dependent on US. Let's get into it.
If you are new to my channel, my name is Jazz O'Brien and I'm a real estate agent, investor and a serial entrepreneur. I went from working as a server to owning multi-million-dollar worth of real estate portfolio in just 8 years. In my career, I have helped hundreds of my clients buy over 900 million worth of real estate using tried and tested strategies, and I am here to share those tips with you on this channel.
Quick note, I'm not an economist, but I'm a real estate investor. This is based on my research and experience, so always do your own due diligence and speak to the professionals before making any investment decisions. Guys, tariffs between Canada and the US are nothing new. Over the years, we have seen trade restrictions on steel, aluminum, lumber, and dairy products, with each having significant effects on industries that rely on these imports and exports. However, lumber tariffs have had the biggest impact because Canada is one of the largest suppliers of softwood lumber to US. When tariff increase, Canadian companies struggle to sell their products competitively, and that affects jobs, wages, and overall economic stability. The US has been imposing tariffs on Canadian lumber for years, arguing that Canadian suppliers receive unfair government subsidies. This has led to an ongoing trade dispute, disrupting business for Canadian companies and creating uncertainty for workers in the industry. There is no doubt that tariffs put pressure on industries, especially in short term. When companies can't sell their products as easily due to high trade costs, they have to adjust. This often means cutting jobs, reducing production, or scaling back operations. The ripple effect is felt beyond just the affected industries. When people lose jobs, consumer spending drops, which impacts everything from retail to real estate. While tariffs create immediate financial pressure, industries always find a way to adapt. When lumber prices spiked a few years ago, some businesses adjusted to exporting to new markets, investing in automation to reduce costs, or renegotiating suppliers' contracts. But if Canada does not take steps to expand its trade network, we will continue to be at the mercy of US policy. One of the biggest consequences of tariffs is job losses. When Canadian companies can't compete due to tariffs, they cut costs, often by laying off workers. This is especially concerning in industries like forestry and manufacturing, while employ thousands of people across the country. When workers lose their jobs, consumer spendings drop, leading to slower economic growth. People spend less on housing, retail, travel, and entertainment, which affects businesses in every sector. The effects aren't just limited to Canada. In the US, tariffs on Canadian lumber makes material more expensive for American builders. This increases costs for developers, and if the project slows down, construction workers and suppliers in the US could also face layoffs. The result is reduced consumer spending on both the sides of the border, leading to weaker overall economic activity. Market uncertainty is another major issue. When businesses don't know whether the tariffs will increase or decrease, they hesitate to invest in new projects or expand operations. This situation highlights a much larger issue. Canada is too dependent on the US for trade. For years, our economy has depended on American partnerships, leaving us vulnerable whenever the US imposes tariffs or changes trade policies. The biggest problem, Canada's leadership isn't addressing this issue with the urgency it deserves. Right now, Prime Minister Justin Trudeau and his government are not taking this threat as seriously as they should. Instead of proactively securing new trade partnerships and reducing Canada's economy dependence on the US, the government continues to react after the damage is done. This puts Canada in a weak position, making it harder to negotiate favorable trade terms. However, Canada has options. We don't have to rely only on US for trade. There are opportunities to expand partnerships with Europe, Asia, and emerging markets that need our resources. For example, China and India are growing demand for housing and infrastructure, which means they need lumber and building material. Europe is looking for a stable energy partners, which Canada can provide through oil, natural gas, and minerals. By diversifying our trade relationships, Canada can reduce the exposure to US tariffs and build a more resilient economy. Canada is one of the most resource-rich countries in the world. We have vast reserves of oil, natural gas, lumber, minerals, and fresh water. Yet, we are not maximizing these resources to strengthen our global trade position. Instead of relying on US as our main buyer, we should be expanding our markets and securing long-term trade deals with countries that support fair trade practices. Trade policies are always evolving, and it is possible that tariffs could increase or be removed depending on future negotiations. However, Canada cannot afford to keep reacting to US decisions. Instead, we need to focus on new securing trade deals and strengthening our domestic industries. One possible outcome is that businesses will look for alternative trade partners, reducing dependence on US buyers. This could create new opportunities in sectors like energy, mining, and agriculture, making Canada a stronger global competitor. If Canada shifts to self-sufficiency in production, it could also stabilize prices in long term, making the economy more predictable. Also, guys, for US, tariffs could lead to a higher home prices and job losses in construction, further slowing economic growth. So in the end, guys, are tariffs as bad as media says? In short term, they lead to job losses, reduce consumer spending, and weaker economy. But in long run, they could push Canada to expand its trade network and rely less on US. The real question is, will our leadership take action, or will we keep repeating the same cycle? Thank you so much for watching. If you are in Surrey, Langley, or anywhere in Vancouver area and want to chat about real estate goals, I would love to hear from you. You can book a coffee session with me with the link description. Until then, I will see you next time. Take care.